Good day. Ira Epstein of Linn Associates with your metals market wrap-up for this Monday, December 9th, 2019. We're just about 4:05 in the afternoon. I have a favor that I am asking of you. In 2020, am going to start another video service, one that is dedicated purely to the ETF markets. So if you have specific ETFs you want covered, I'd like to know what they are. All you need to do is go to our YouTube page, put down the ones that you'd like to see, and the different categories. It's that simple. And what I'm going to do is sometime in January, as we get rolling into the beginning of the year, I'm going to start about 8:30 in the morning recording an ETF video. That's Central Time, so it's right about before the stock market opens. I don't want to do more than 8 to 10 ETFs at a time, but I will cover the ones that our clientele wants, and let's see what we can put together. I think you'll find it fascinating as to looking at them versus the futures market sometimes. So just an ETF video only. So interesting. All right, so here we go today. These are the settlement prices. You know, today was a day dedicated, as you know, to the House Judiciary Committee, and it's still going on. It's been going on since 9 this morning, and here we are at 4. It is still rocking and rolling. We have the Fed meeting tomorrow. They end on Wednesday. We have, in addition, the Brexit vote taking place. That is on the 12th. And then before the 15th rolls around, we're supposed to hear something on whether tariffs are going on China or not. It's a full week. And I think that's one of the things that the market is caught up with, is trying to figure out what to do next. As we look at the gold market, as you can see, we've still sat back a bit. I was looking today at a Goldman Sachs report as they're predicting the market could get back up to the 1600 level. I'll let you go online and read their own report, but that's what they're talking about. I still see the market as drifting to the downside. As you take a look at this chart action, the question in my mind, because this is what I had done that gold report now over 2 weeks ago, that video report, I was wondering, would the market be able to get down and challenge these levels again? We are approaching the time frame where the market often, not always, gets a seasonal, though, bump to the upside. What about stopping that? Well, you'd hurt the current chart action if you took out 1459.80. Don't take that out, and what you have right now is a pattern of higher lows, higher highs. In relation to moving averages, the 18-day average is right here. So it's at 1473.30. So we have downside bias because you're under that number. The swing line, and that's this study right here, is showing a pattern of higher lows, higher highs. If you can clear the 18-day average, another resistance is 1499. What about if you break down from here and get under 1459.80? Well, at that point, the lower Bollinger Band comes in. So I'm starting to believe that unless we get some piece of news over this week that we're not ready for, it's going to be an interesting time. We're winding up price in sideways action in gold. When you look at momentum, another piece of divergence. It's pointing down, the swing line is up, and bias down. In other words, nothing's together. The market's fighting itself, and it's that churning that we're getting to the side. When you look at GLD, you've had a downtrend. Lower highs, lower lows. Target could be the lower Bollinger Band. You'd have to go all the way back up to 139.46, taking out that high to negate this. But more important is the fact that the market's drifting sideways in tightening up bands. Something's brewing in the market. Let's go to the GDX Juniors. Momentum down. The pattern lost its uptrend. I can't do that chart, unfortunately. When it took out on Friday, right here, the 3870 level, and the market broke through that. So now you've got a higher high, lower low, two big levels of support though. You have the 18-day average at 3776 and the 100-day coming in at 3752. When we go to GDX itself, the pattern is one of lower highs, lower lows. Now here I can play with this one. And if you take a look, if you break down from here, maybe you get back to the 18-day average of closes. Momentum was overbought. the market starts correcting its momentum. On Friday, it goes right back to that number. So at this point, you've got lower highs, lower lows. You did manage to settle just under that 18-day average, which is now a resistance point. And today you finished 26.92 after getting through the 27.03 18-day average. So the trend in this market is down. The trend in this market is not down. It is neutral at this point. The gold-silver ratio does not favor yet an uptrend in the metals as a group. As long as the number keeps going higher, traditionally, what happens is the base metals stall versus it. But that's really not something that I see going on other than the gold-silver, and I'll show you this in a moment here. We've got lower highs, lower lows. So I understand the gold-silver ratio purely. You've got the market oversold. You're trying to push on this lower Bollinger Band. You can see how the market's narrowed in and you're pushing on it. The key is not to take out, if you're bearish, 1712.5. If you take that out by tomorrow, then I say a bull trap, actually a bear trap has been sprung, and you put into play the upper Bollinger Band. If the market wants to stay down here, the problem for it is it's oversold and not even remotely close to locking in the slow stochastics to do with the word I call embedded. In other words, keep power to the downside. There's nothing bullish on the chart. The trend is down, but you've hit downside targets and you seem to be stalling at them. In the copper market, this is about a couple of things. If you took a look at the November imports of copper, let's call it the aggregates and all that they use that they need internally in China, you saw it went up about 12%. That's big. The second thing is if you're watching the London Metal Exchange and you're watching China's supposed stockpiles, they have been falling dramatically. It's very possible that what has happened in China is they've been in this whole time frame here using up ground stockpiles that they've imported, and maybe they're at the point where they need to import more. Now you add to that the stimulus that they're doing internally, and you question where are we on these tariffs. A lot of things going on, a lot of elements moving on you. The bigger pattern is a lower low, higher high. The market did break out, as you can see, on Friday of this, and it held that breakout today. I wouldn't be surprised if it tries to get back under the Bollinger Band, given how overbought the market is, but I don't see a trend. I do see an overall pattern where the market is trying to establish a value. In the platinum market, and this is the April platinum, you've had a pattern of lower high, lower low. That gets negated if this market in the April contract takes out 909.40. If you don't take out today's low first, you could end up with higher lows, a higher high, and suddenly this market turns on you and looks bullish instead of being bearish. Therefore, who's in control today? The bears. You still have the lower high, lower low. They're going to try, I think, to defend their position between 905.90 and 908.70. But if you clear that 909.40, I think they pop out of the market. In the palladium, this is the strongest of the metals. In fact, it's one of the strongest commodities of 2019. This is an all-time high. It just doesn't give it up. One of the reasons we know is China's clean air. They're trying to clean up their air pollution. We know that Europe's bent on that. And supplies are tight at this point. So you've got a market that just keeps running to the upside. In the dollar index, we've gone from a Bollinger Band high a week and a half ago to a Bollinger Band low. We made that last week, kept hitting it, and bounced. That's all you can say. Are we trending? No, you're just whamming back and forth, and that makes sense. You've got all these events happening to impact the dollar index this week, so I think people will be looking at that. Remember, I asked a favor of you. I hope you help me out. Tell me the ETFs you want me to follow. In any case, during the meantime, if you'd like to see our market research from the Linn and Associates, we cover a host of categories, and they certainly include all the currency markets, the metals for you. Just go to our website at www.iraepstein.com. You're going to see free offers on it. Choose the market research, and yes, you can choose the different categories. You don't have to get all the different categories that we offer. So you choose the ones you want. We don't want to give you, let's assume you're a metals trader, you may not care about the grain markets. We understand that. You can get this either in our QT platform, or you can get this in our charting platforms and or by email. And we cover all these different areas for you. So I think you'll find it interesting, especially a way to start off your new year if you haven't seen what we offer our clientele. We cover the options, the futures markets, and of course we talk hedging, what's going on there. You can go to the website, free offers, or the old-fashioned way, give my staff a call. I'm Ira Epstein. You have a great day.